Hi everyone, welcome into the free stocks to buy, and today I'm in a new setup, so it does look a little bit different. Hopefully the lighting is okay, hopefully the sound's okay. It does sound a little bit echoey right now, but I'll see what it comes out with, and you guys comment down below, let me know what it sounds like as well. And yeah, I think the lighting might be a little bit better. So yeah, we'll see how it all goes, and like I say, put some comments down in the comment section, let me know what it looks like for you guys. Obviously I don't know what the sound looks like until I edit the videos, but I think the lighting looks a little bit better, and also the tripod's a little bit closer as well. So because of that, the camera might be a little bit better quality as well. So you guys let me know, and I'll see what it looks like after I've edited the video. But yeah, we'll talk about the free stocks to buy 2020 edition. And funny enough, the only reason why I've got enough time at the moment to kind of move rooms from where I'm normally recording, and hopefully it works a little bit better in this room, because the main problem with the last room was there was a lot of lighting problems. But hopefully this one is a lot better. But the only reason why I've got time really at the moment is I actually got tested positive for coronavirus on the weekend. So I currently have like 10 days, I guess, off work. So I'm still feeling fine to record videos and edit videos and talk about videos. So I've not really got a bad cough or anything like that. So I'm pretty okay to do a lot of this stock market stuff of what I'm currently doing as well. So hopefully I'll still put a lot of content out for you guys while I'm still off work. And maybe I can do some live streams as well, because I'll have a lot of time free, I guess, because I was just going to be stuck inside, I guess. So I'll be putting still content out at the moment, and we're going to kick off with the free stocks to buy. And this is normally the most popular video series that I do on the channel, brings in a lot of new subscribers. So if you are new, make sure to subscribe. And you guys are here all the time, smash the like button. And we'll take a look at the free stocks that I'm looking to buy in December 2020. So just going to give an honourable mention to Beyond Meats, because they should really have been in this video series, but because of how much they've gone up already, I've stopped buying them. But I thought it would be in this video series, but just because of how much it's gone up, like I say, it's not going to be featured anymore. So I'll go through the free stocks that I am going to talk about and I'm looking to buy in the month of December 2020. So number one is Turtle Beach, which is a gaming stock, or better known for making headsets for gaming. And I started buying this one last month, and I'll be honest with you, it has gone up a little bit since I bought it. So I am waiting for it to pull back a little bit, but if it does dip a little bit, and I'm only talking like 5%, then I might actually go buy this company and add it into my position that I currently have. And if you do want to keep up to date when I am buying and selling stocks, make sure you join my patrons group. The link is in the description. But I'm buying this company because obviously we've got the work at home trend, but the big thing is we've also got the console cycle. So we've got a new Xbox and PlayStation coming out. And because of that, people are going to naturally upgrade a lot of their gaming gear and like their headsets. Now, I actually went on Turtle Beach website after the PS4 was launched, and the majority of Turtle Beach's headsets were sold out, which is a really positive sign for the next quarter. And as well as having headsets now, they also have bought out Rocat, which is a German company which focuses on mice and keyboards. So they've also got that side of it now, not just being a headset company, which I think is where they've kind of struggled previously, just not expanding that much. But now they've bought Rocat, it lets them into another industry, which could be huge. So the ticker symbol for this one is HEAR, H-E-A-R. And when you look at the price, it's had a bit of a decent run recently because of the work at home trend. It's about $19, but anything under $18 is where I'll be willing to buy this company. And just from a valuation sort of view, it's currently trading at a P ratio of 8, which is so cheap, especially for a company that's going to be looking. Obviously, it's going to have a boom at the moment because of the console cycle and the work at home trend. But also because of its new purchase in Rocat, it's going to even after all the work at home trend's gone, it's still going to be growing revenues at 10% year over year, which is huge. It's like a growth company trading at a P ratio of 8, which is very rare. And even if you compare it to something like a Logitech, that P ratio is 22. So even like in a market point of view, to some competitors that are very similar, it should be trading at a fair valuation, probably with a P of somewhere between 16 and 20. So if you say the P is already really cheap and there's already at least 100% upside in the share price, and let's not forget that's not in factoring the growth it's going to have because of the console cycles over the next 2 years. You can tell this company is got about 100% upside in this company at least. So anything above $36 is probably where we get to a bit more of a fair valuation. And like I say, I see that probably being 100% upside from here. So I do see myself making 100% upside on this and selling out when it starts getting above $36 and a little bit more than that. And like I say, it's got fantastic growth ahead of it. And as well as that, it's a company sitting on an amazing balance sheet, no debt on the balance sheet. It also holds a lot of cash, and that's why it was able to go buy out Rocat. And yeah, I think Turtle Beach over the next 2 years, because of this console cycle, has massive potential. So number 2 is a company that I bought some more last week, but I actually might buy some more going forward in the month of December because it does seem like one of the cheapest companies that are currently on the stock market, which is Dropbox. And this is kind of like a cloud storage platform, and it's currently around about $19. I would like to buy a bit more when it's under $18, so I will wait for it just to maybe drop back a little bit more up before buying, but I still think at these sort of prices, we're only talking $1 difference. It's still a pretty decent valuation. Trading at a P ratio or forward P ratio of 19, which is crazy for like a growth company. To have a forward P of 19 is very dirt cheap. You don't normally get American growth companies trading at a forward P of 19. Normally we're talking 30 plus. And this company originally IPO'd in 2018 at like $20, went all the way up to $40, and now it's just been flatlined for pretty much since its IPO. So it's not really done anything for 2 years. So you can see from a P standpoint and price standpoint where it was IPO'd at, this company should be at a bigger valuation than what it is right now. And I think the company's only been held back because it's got so many big competitors in its area. You look at the likes of something like a Google and Microsoft. They say that these are the kind of the big players in this sort of industry, and Dropbox will always struggle with these competitors being in their industry, but Dropbox has been around for so long and it's still managed to pull out double-digit growth. There's nothing going to change now. It's still got its own little neat sector, or holding a percentage of this sector, and I think it will still carry on holding it. It's never been defeated by like your likes of Microsoft and Google and everyone like that. It's still managed to take a good chunk of this sector and still grow at massive margins. So I still think it will be able to hold its own, and maybe that's why there's so much short pressure on it and why the stock's been pretty much flatlined since it IPO'd. I like to say 10 plus revenue for a very cheap stock. It also has massive profit now, which is going to help it. I mean, they could potentially look at that as buying back some shares, which will help the share price. Or it might go and purchase something. So we can see that it also purchased HelloSign, and that will help it with signatures, online signatures going forward. And with all that, it gives it an amazing balance sheet as well, with a lot of cash there. And like I say, that might lead it to go buy some more other companies out, or it might use it for share purchases, which will help the share price. So I think Dropbox, when it's valued at something like a $18, $19, it's just really cheap at forward P of 19 for like a growth company like this. This company for me should be at something like a $40 stock. So yeah, over 100% upside for me in Dropbox. And number 3 is Tattoo Chef, ticker symbol TTCF. And I did a full video about this one the other day about an interview with the CEO, which is definitely worth a watch if you shareholder in Tattoo Chef. But a quick summary into this company. It is recently come on the stock market through a SPAC stock, which gave it a massive cash injection. The company's trading at a very cheap valuation compared to something like the other SPAC stocks. Even if you don't take that into consideration, comparing it to something very similar in its area like Beyond Meats, it's trading at a 1 billion market cap. And this company is growing at a fantastic rate. It's growing 60% plus revenue growth. And historically, this company has also been profitable as well, with not many companies growing at that sort of revenue. Normally they're not very profitable, but this company is. It's got an amazing balance sheet now because of the SPAC stock and the cash injection it's got from that. So it's got a lot of cash. It has a major deal with Walmart, which at the start of 2020, it was only in 7% of Walmarts. Towards right now, it's about 50% into the Walmarts. And as the year goes on and as we go into 2021, I'm sure the deal with Walmart will only ramp up. They've also started a deal now with Target, and they're currently in about 300 to 400 Target stores, and they've only got 2 products in Target at the moment. Now, what is said from so far with that deal with Target is that it is very successful, and that Target will look to put more Tattoo Chef products in more Targets and expand. I think it's something like around about 2,000 Target stores there is. I will have to fact check that one, but I think it's something around there. So you think they've also going to expand that Target partnership in 2021 if it is being as successful as they are saying. And as well as that, it's only 2 products. So you think about all the products that Tattoo Chef do have. If they currently have more and more products in Target rather than the 2 they currently have, that's also going to help sales. And also Tattoo Chef have just launched their e-commerce site, so that's going to help sales as well, having an e-commerce site. And also previously they've done zero marketing of their plant-based products. And now because they've got an amazing balance sheet, they can afford to put a bit more cash into marketing. I made a video the other day and I said that it's 2 billion they're putting into, I didn't mean to say it, but I said they're putting 2 billion into marketing. I meant they're going to go for 2 billion impressions. A bit of a bad mistake there from my half, but yeah, 2 billion impressions they're going for now, which obviously will be massive. And I believe it was 6-second impressions as well. So it looks like it's going to be some sort of form of, like video advertising by the sounds of it. So yeah, you're thinking no marketing to get 65% revenue growth. And now you actually have some marketing. You have a Target deal now, which could ramp up. You have their e-commerce site. It could be pretty big, really, for Tattoo Chef over the next 12 months. And like I say, I think right now you look at the stock, it should be, in my opinion, in 12 months' time, probably a $30 stock. So those are my 3 stocks to buy, September 2020 edition. I hope you enjoyed it. And like I say, those are the 3 that I'm definitely looking to buy. They are maybe a little bit more of a pullback, will be a little bit more interesting. But even so, I believe the 3 companies I did say, even at the prices they're at, are very definitely cheap stocks with a lot of upside. And I will definitely be looking to buy these 3 in the month of December 2020. I will try and do my UK stock version within the next few days as well, so keep your eyes open for that. And if you are new around here, make sure you subscribe. You guys that are here all the time, make sure you smash the like button. I'll see you in the next video.